Hello, everybody. Welcome. Let's get started. Give me one more second. Um, all right, let's get started. Overall markets are about flat today. Nvidia is up. That's pulling Nasdaq up 0.3%, S&P up 0.3%, Dow Jones down 0.2%, Russell 2000 flat. Energy stocks are lower today. Eli Lilly is higher on earnings. Everything else is mixed. Tesla is down today 2.3%, despite announcing that they're hiring for Optimus in Fremont, California, which tells us that the production is not really starting anytime soon. They need to fill those roles and they kind of have to get it going. So, I highly doubt that they're going to produce many this year. So, let's say they start next year. It's going to be a gradual production ramp, just like it's been with any other program Tesla has. And then it's TBD. So we'll see. Fremont production is going to be pilot, just like with the 4680 production. And then the product needs to be finalized, version 2, version 3, and then they might or might not bring production to Texas. We'll see. I mean, just like 4680, they announced they would do it in 2020. There were rumors of 4680 production in 2019. 2020, they announced with a battery day, and then they started doing it, but it's 2025 and it's still not anything material to Tesla. So, good to take things with a grain of salt when it comes to Optimus project. All right, let's see what's going on with the markets. S&P 500, Nasdaq rise on earnings reports, Trump Fed policy in focus. S&P 500 and Nasdaq picked up on Thursday as some upbeat earnings reports brought relief to the markets while investors awaited U.S. President Donald Trump's next policy move and a key jobs report. Drug maker Eli Lilly rose 4% after the company forecast annual profit largely above estimates, while Coach parent Tapestry jumped 12% on annual sales and profit forecast rise. Let me see how the volume is on YouTube real quick. Please let me know how the audio is on YouTube. All right. Philip Morris advanced 9% after cigarette maker posted better than expected quarterly results and forecast 2025 profit above estimates. Amazing. Honeywell fell 6% after industrial and aerospace giants said it would split into 3 independent listed companies and forecast downbeat sales and profit for 2025. The sharp decline dragged down the Dow. Amazon rose nearly 1% ahead of its quarterly earnings report after the bell, while other rising megacap stocks, including Nvidia, also aided gains. 7 of the 11 S&P 500 sectors traded higher, with consumer staples and financials leading gains. Markets saw a dismal start to the week when Trump announced sweeping trade tariffs over the weekend, but suspended the levies on goods from Mexico and Canada on Monday for a month. Although many uncertainties remain under the Trump administration, Wall Street was relieved that things were not worse, particularly with regard to counter tariffs against the United States from Beijing. We are in the calm before the next storm. Moves are going to continually be around geopolitics, which is going to raise market volatility, said Scott Hafstein, head of investment strategy from Global X ETFs. Hafstein said that the Fed expected to hold rates steady. We are entering a market that will be more fundamentally driven and based on the real economy than sentiment. The January non-farm payroll report is due on Friday, so that's tomorrow. A crucial metric engaging the state of the labor market and the Federal Reserve's rate path. I mean, ADP reported, solid numbers, solid job growth. And they can vary, but the commentary from ADP was also solid. And ISM numbers have been coming in growth now for both services and manufacturing. Initial weekly claims have been lower, have stayed low in low 200,000s. Continuing claims are steady at 1.9 million. So not much evidence of a employment market that's breaking down at this point. But especially with all the if the sending back people, immigrants to their own countries, that's going to be an issue for especially the construction industry. But so I don't expect a major news in tomorrow's report. What I'll be looking for is the wage growth appears to be still kind of 4%, and that's not consistent with 2% inflation. Although in the last press conference, the Fed said that the employment market, Powell said that the employment market is not a source of inflation, is not a source of pressure for now, in the employment market. So, on the other hand, we're seeing gold prices, which can be an indication of inflation, surging at all-time highs. Coffee prices are surging. So there's some pockets of still price inflation, but overall, inflation seems to be coming down. We'll see if it continues that way. 10-year Treasury yield today is at 4.45, up 3 basis points. 5-year Treasury yield is up 4 basis points at 4.28. So pretty flat yield curve. Today we got the Q4 productivity number, which came in higher than expected, 1.2% as opposed to 0.8% expected, but down from 2.3% prior. So this is Q4 productivity. And our unit labor costs came in at 3.0%, higher than the expected 2.6%. So labor costs, I'm a little surprised that at this point Powell said they're not a source of inflation, but maybe he sees more data than I do. I'm going to read the Fed's some more data that the Fed publishes and report back. Maybe they're seeing something I'm not. Oil prices at $70 per barrel. Trump had made some comments that they're going to drive oil prices lower, which will lead inflation lower. We'll see about that. I'm not sure how much Trump has control over oil prices, but I think it's more of a global phenomenon. But we'll see. All right. On the data front, the number of Americans filing new applications for unemployment benefit increased moderately last week. Skyworks Solutions plunged 24% after Apple's supplier forecast declines in revenue in its mobile segment and projected current quarter profits below estimates. So there seems to be some weakness in smartphones. Kind of we're seeing from the suppliers like Skyworks and Qualcomm, but Apple earnings were fine, it seemed. So I wouldn't hold Apple at this point. I recommend my patrons to buy the stock at much lower prices, but I think at this point the Apple stock is, I would be, it's I probably wouldn't hold it at this point. Let me see. I think when I recommended the stock, it was at 160. Yeah, now it's 230. Not as high as 255 that hit, but I think it's probably a little bit overvalued today. All right. Qualcomm fell 5% as the chip design executives said its lucrative patent licensing business will not see sales growth this year after a license agreement with Huawei Technologies expired. Yeah, that's amazing. Qualcomm patent licensing business will not see sales growth this year after the license agreement with Huawei Technologies expired. Interesting. Qualcomm was up a couple percent after they announced. They beat both on top line, bottom line. Their outlook beat estimates and everything, but the stock is down 5%, which is really interesting. And now Ford dropped 6%, and we're going to dig into Ford financials. Chris, go ahead.
Yeah, could you reiterate what you just said about Apple stock? Did you say you recommend people buy, hold, or sell?
It's not a stock I would hold today. I recommended the stock back when it was 160 for patrons, but the stock has run up quite a lot. I mean, about 40%. And we're seeing some weakness in these suppliers, Skyworks, Qualcomm, and they're losing. I think people are underestimating the companies in China. So, um, so we'll see. Yeah, but I wouldn't. That's not a stock I would hold today.
So you don't think the goggles are going to take off?
No, no, I don't think so. I don't think so. I mean, not much innovation coming from the company. There's not much innovation coming from the company. Okay. What else? So we covered macro. We covered what's happening in markets, yields, oil. I want to read this post from Ford President CEO Jim Farley, what he said on the earnings call. So let's talk about Ford. Chris, any other questions before we move on to Ford?
I'm very happy with my MacBook with the new M3 chip. That's like sort of compelling to me. Like they still have the best laptop in the game, I think, in regard to Apple. But yeah, I agree. There's not a lot of innovation. So
Yeah.
yeah,
Okay.
no other
So
questions.
I pinned the tweet I'm going to read up top, and it's also on YouTube as well if you want to read along with me. Let's see. Ford President and CEO Jim Farley touched on two Chinese EV products, the Xiaomi SU7 and Li Auto eRevs. This eRevs is a major topic that I think is undercovered in the Tesla community and on media as well. So eRevs, so if you think of these vehicles as a spectrum, there's ICE, just gasoline, diesel cars, and BEVs on the other end of the spectrum. Hybrids, traditional hybrids, closer to gasoline vehicles, but they also have a battery, but you don't need to plug them in. And then if you move along the spectrum further, you get to plug-in hybrids, which haven't really caught on much. And then you have EREVs between plug-in hybrids and BEVs. So these extended range EVs is something interesting because they're very popular in China, and now Ford is talking about them as well. So let's read these comments. I think this is very material for Tesla investors to kind of take note of. But let's see what this says. On shiny Chinese competition subsidies. This is from Ford's earnings call yesterday. The level of subsidies that these companies have in China is very material, as well as there are digital vehicles with digital footprints and really deep into people's digital life. So we have to have the right policies around privacy, the right policies around national security, because these are not the cars of old, they're data collection machines. On the kind of unfair part of this subsidy part, I think we will have to sort that out as a country because they're part of the competitive environment that when you list the kind of advantage the companies have, it's like a page long. What I learned after 40 years in this industry is the company has to stand on its own, toe to toe with the cost of those companies and the product appeal of those companies. We need to work with our government partners to make it a level playing field as much as possible. But at the end of the day, it's management's responsibility to beat the SU7 straight up in a street fight. Now, comments on EREVs. Let's continue with that. When you have a chance to spend time with Li Auto, some of the best EREV companies out there and their customers, what's interesting for me when we started to absorb this leadership team, is we were really impressed that the customers thought of these vehicles as EVs. They do not think of them as hybrids or plug-ins. These are electric vehicles. They use 95% of the miles as electric, and they plug them in every night, and the satisfaction is even higher because they're more affordable for people. The batteries are so much smaller with 150-mile range versus these huge batteries and three-row crossovers for 300 and 350-mile range. You're talking about tens and tens and tens of thousands of dollars. So for the customer, you're able to buy an electric vehicle that's fully comparable to an ICE vehicle in terms of cost. And because there's no transmission and no gears, no driveline, there's no axles, duplicate axles, there's no duplicate powertrain, the incremental investment of fitting that combustion engine in there is very minimal to the customer. I think at the customer level, Americans love their big cars. They love their big trucks. That's what we do. We drive these big vehicles, and but some people would love to feel that instant acceleration. They love to be able to drive by a gas station all the time. They love the feel of the electric, but they just can't get it. It's $30,000, $40,000 too expensive for these big vehicles. So this technology gives them the electric experience without the range anxiety. Now, it's not perfect. If you tow, it's not a good technology. The batteries have to be too big, so it's not a Pinnacle. But I think how we'll look at it is given we're number three in hybrids, the Pro Power onboard thing really surprised us. People love hybrids for more than just the fuel economy. I think we see this in more degrees of hybrid and PHEVs as a solution for customers. E-revs for certain kind of vehicles, heavy vehicles that don't tow, and then pure EV for commercial are very affordable. Yeah. So, I mean, I guess this really explains why e-revs are so popular in China. And looks like, Ford is thinking about them for their trucks. And this comment about people thinking of e-revs as EVs as opposed to hybrids is really interesting. So you get 150-mile range, but you can still use the gas station. So that would get people over the kind of hump of, where am I going to charge it? Very interesting. I would love to hear from Tesla bulls if like how they think about e-revs, if they see a threat to Tesla sales here from e-revs. Whether you're on X, want to come up to speaker board, or leave a reply, or leave a comment on YouTube, live chat. Either one is fine. Chris, any thoughts on e-revs?
To be honest, I didn't know about this. I've long thought that hybrids will be very competitive with Tesla, and they are. I actually just switched from a Tesla to a hybrid, and the reason I bought a Tesla in the first place was I loved the autopilot system back in 2019. But now that's not a differentiating factor. It's like it's pretty standard with new cars today. So yeah, it sounds like this is actually just increased competition for hybrids versus Tesla.
Okay. Washington Post is reporting that Doge is feeding sensitive federal data to AI to target cuts. Interesting. Um, competition for hybrids rather than Tesla's EVs. Okay.
No, sorry, I meant to say cut like an advantage for hybrids, right? Because as I understand it, these e revs are they're hybrids, right?
Yeah.
So this is like a huge win for like Team Hybrid against Team EV, right?
Yeah. Yeah, I think so. I mean, at least that's what this data shows in China, out of China. I also want to kind of point out again that BYD is on the issue of lidar. So changing topics on the issue of lidar. People think of lidar and Waymo cars, etc., as too expensive to build. I think I saw somebody replied with a $400,000 to build a Waymo. This is obviously not correct. And lidar prices have come down from several thousands of dollars to hundreds of dollars now. And they're going to continue to decline. And BYD is already putting LiDAR on its $25,000 CL cars. So BYD is a mass manufacturer, obviously, is the world's, I think, top four now, top four automaker, and more than Ford. So they produce more EVs than Tesla. They have half the ASP of Tesla's ASP, and they make more money bottom line than Tesla. So, like these are the facts. But for some reason, Tesla influencers seem to be spreading misinformation about lidar, about BYD, etc. So just be mindful when you read stuff. All right.
Could you name these influencers?
Just people with hundreds of thousands of followers, tens of thousands of followers. You know who they are.
Like whole Mars catalog, like people like that.
Well, that's the one I just quote tweeted because he said Huawei ADAS uses LiDAR, and that's why they're only in a few high-end car models. I mean, that's the way it was in the past, but that's changed. So where is the updated information? And this has been the case for the last several months, like BYD announced it several months ago. And same thing with Mercedes ADAS system, the level 3 autonomous system. People still think it's only limited to like 40 miles an hour, which is not correct. That was the case last year, 2 years ago. But Mercedes changed that. They increased the speed limit, and they're going to continue to increase the operational domain, of the system. So it's too much bias, misinformation. Tesla is trading below $370 at 369. Nvidia is at up to 3% at $128 per share. I might possibly add to my short position on Nvidia. We'll see. It's TBD. Let's look at Ford. Ford stock is down 6.4% today at $9.37. This is the lowest level that the Ford stock has seen since COVID, since 2020, which is amazing. Ford and they're going to have more cost increases kick in future years as the UAW contract is shaped that way. So, yeah, it's really amazing. Let's pull up their financials, see what they announced, see what they reported.
I'm fascinated by this EREV thing. I'm reading about it now. Do you think that this is something that Ford and Tesla will do?
I don't see Tesla doing this. I mean, I can't imagine Tesla putting in gasoline engines in the cars. I don't think Tesla will do this. I would expect Ford to do it, yes, because he says their primary issue with EV is that they cost tens of thousands of dollars more to build because of the big batteries. But EREVs have smaller batteries, but they still go 150 miles range. And yeah, obviously enough for most trips. But that small addition of an engine gives people kind of gets them over this where am I going to charge it issue. So they can still, they can charge overnight, but they can still use the gas station network if they need to. So I think that's why people like it so much. And this is completely against Tesla's mission. So I don't think Tesla would ever do it. I mean, can you imagine Tesla buying engines from Ford to put it in? Yeah, it's not going to happen.
I agree that it's probably not going to
And
happen.
he says EREVs are about the same to build, like the additional cost to. So basically, like when you think of an EV, it doesn't have the transmission, the engine, etc., right? And all the other components that comes with a gasoline powertrain or diesel powertrain. And EREVs get rid of most of the diesel gasoline powertrain, just keeps the engine, as far as I understand it. So So you still get majority of the savings. You don't carry them around with as you do with a hybrid model. So I just thought, it's really interesting. His comments were interesting because I've been looking into EREVs because they're kind of on fire in China. They are catching on in China.
I think that it would be aligned with Tesla's mission because they're saying that it's still 95% of miles with EREVs are electric, so that would help the environment, right?
Yeah. I mean, I will bet you a coffee bet if you want.
No.
Okay. Okay. Um, yeah, DGM says be careful with the NVIDIA short ad. Yeah, I mean, I've seen this like gap fill theory, from technical analysts, but and I was kind of expecting that gap to fill, to be honest with you, when it first dropped, and then we got so many interviews, so many analysts going on TV, and so many retail investors, a record number of purchases, the record amount of personal retail investors to add Nvidia stock, and still that gap didn't fill last week or this week. So I just find it really fascinating that despite all the buy ratings and all the hoopla about this company, the balance hasn't been nearly as strong as I expected after that 25% drop. So we'll see where it goes from here. Um, right now it's kind of trading at the high of January 28th. We'll see if it breaks through that. Who knows? But yeah, I think fundamentally the company is a little challenged, but you know, we'll see. They have in March, Nvidia has some sort of an event coming up, some sort of conference coming up, and maybe I'll short it closer. I'll add to my short maybe closer to that point if the stock continues to run. But there's going to be a lot of hype going into it, so we'll see. Also, the rebound back up 200-day average, moving average has been less kind of much less volume than what we saw last week after during the drop. Anyway, enough technical analysis. Let's pull up the earnings transcript of Ford. Huh, it's not on here yet. That's funny. They haven't put the earnings release. Okay, here we go. The transcript isn't on there, but Ford reports for full year 2024 results. Okay, full year revenue increased 108 to $885 billion. I mean, that's the other thing too. Like Tesla is the only company that had a decline in year-over-year sales, other than Nissan, I think. I don't know of any other company that saw a decline in year-over-year sales in 2024, which is fascinating. I'm sure some of it is due to the new Model Y rumors and everything, but I think Tesla did a nice job of holding that back. So I don't know. Company declares first quarter regular and supplemental dividends. Outlook for 2025 includes adjusted EBIT of $7 to $8.5 billion, adjusted free cash flow of $3.5 to $4.5 billion. So that's the kind of free cash flow that Tesla generates, about $1 billion a quarter. So Ford obviously is worth about $30 billion. Tesla's worth $1.2 trillion. Capital spending of $8 to $9 billion for Ford. That's about the same as what Tesla spends as well. But that's some of that is due to the AI training chips. So just really interesting. Really really interesting. So Ford produces twice the number of cars than Tesla. Generates about the same free cash flow. Capital spending is about the same. I think 2025 outlook is about the same as well. So fascinating stuff. Let's see. Ford is becoming a fundamentally stronger company, etc. Let's skip the fluff. In 2025, we expect to make significant progress on our two biggest areas of opportunity, quality and cost, as we enter the heart of our Ford Plus transition. Okay. Higher growth, higher margin, etc. All right. We also need to talk about Rivian's announcement around their autonomous driving. And BYD is also making an announcement around tomorrow. This BYD stock is up 10% today. But have you heard that from influencers? No, of course not. The company posted fourth quarter revenue of $48 billion, $2.2 billion increase from the same period a year ago. Cash flow from operations in the fourth quarter was $3 billion. Okay. $28 billion in cash, nearly $47 billion in liquidity, providing the flexibility necessary in a dynamic environment. Okay. So those numbers are also similar to Tesla's cash number and liquidity number. Let's see. Let me see if there's anything I can kind of gain out of this. Fourth quarter for 2024, EBIT margin was 5.8%. This is Ford Blue segment. Model E segment is still losing lots of money. The Model E segment lost $4.7 billion in 2023 and $5.1 billion in 2024. That's fascinating. That's an insane amount of loss. And then they make their money off Ford Pro segment. But just a warning that management has a ton of leniency into how much when they do business segment department allocations, expense allocations, they have a lot of they can do a lot of things. So they might be booking more expenses into that segment. Who knows? I wouldn't worry about that too much. Ford Credit reported full year earnings before tax of $1.7 billion, an increase of $323 million compared to last year. Chris, we were talking in the subscribers only space about the rising delinquencies in automakers on auto loans, and Ford is not seeing that. Ford is not seeing that in their Ford Credit. I think Ford Credit performance was higher than estimated. So we can dig into that slide a little bit more after I kind of finish this real quick here. Full year 2025 outlook, Ford anticipates full year adjusted EBIT of $7 to $8.5 billion, generate $3.5 to $4.5 billion adjusted free cash flow, with capital expenditures of $8 to $9 billion. Basically the same free cash flow and same capital expenditures as Tesla. Company expects first quarter 2025 adjusted EBIT to be roughly break even due to lower wholesales and unfavorable mix, including launch of activity at major U.S. assembly plants, including Kentucky Truck and Michigan assembly plants. Okay. Let me see if there's anything else in the release. Income statement, balance sheet, cash flow, selected balance sheet information. Okay. I just want to look at the credit quality here, see if there's any deterioration. All right, so let's pull up their presentation. Slides. Okay. Free cash flow and liquidity. Okay. They return 40 to 50% adjusted free cash flow to shareholders. Okay. Expanding software and physical services. Let's read that real quick. Blue Cruise enabled vehicles on the road in America more than doubled to 675,000. Lowered subscription pricing across various plans. Version 1.4 rolling out to select vehicles in 2025. Paid software subscriptions, 865,000, up close to 40% growth across all segments and gross margins over 50%. Over-the-air updates delivered nearly 29 million across 4 million vehicles in 2024, improving vehicle performance and resolving issues. Yeah, that's amazing. Yeah. I mean, these are above and beyond. Like even Tesla's numbers aren't this high. Obviously Ford has. It's not 100% comparable services, but No, I think Blue Cruise from Ford and Super Cruise from GM are better than what Tesla bulls believe. And they keep saying like, "Have you tried FSD?" Well, have they tried Blue Cruise or Super Cruise? I bet you not. So that's the kind of double standard that comes. So this, I'm going to pin this up here. Chris and then Steven.
Yeah, just circling back to your comment on the delinquencies. So I'm on Ford's website and they advertise 5.9% APR. If you look at the offer details, it says not all buyers are going to qualify for Ford credit. So it's totally different than Carvana. Carvana advertises everybody's going to qualify. We don't check your credit. And they handing out loans for 13% to people who don't qualify. So Carvana's soaking up the poor credit people. And so Ford's not going to be experiencing that nearly as much.
Okay, Steven.
Hey, good afternoon, Yaman. I just recently purchased a 2025 Ford, and I could speak on. I don't have the Blue Cruise. I didn't get that, but the autopilot that they offer is. I mean, I could turn it on when I'm in traffic, and I don't have to worry about it. It'll start, stop, and it'll just maintain the distance between the vehicle. So, and it's free. It's free with all of them, all the Fords, I guess, that they manufacture now. But I mean, that in itself for someone who lives in the city, a city-ish type environment, it's very. I mean, it's useful. It's helpful, and I mean, so I don't know. Take it as you will, or whatever the expression is, but it's not bad.
Thank you, Steven. I mean, just the fact that it's enabled on 675,000 vehicles. Paid software subscriptions have seen a 40% growth. And they've delivered tens of millions of over-the-air updates to millions of vehicles in 2024. Is above and beyond what I think, Tesla bulls, including myself, believed a couple of years ago. So Ford Blue Cruise and GM Super Cruise have definitely exceeded expectations, of any Tesla bull, I would say.
The other thing I could say, if you want to hear it, Iman, is about the software that they use on their vehicles. Where even though a lot of all the vehicles they offer now don't offer Blue Cruise, it looks like the hardware that they've installed on them. Eventually, if they're able to, they'll be able to just kind of turn that feature on in the vehicles. Because my vehicle doesn't have Blue Cruise, but it already has the cabin camera as well as the other cameras that are needed for it to function. It's kind of weird.
Gotcha. Thank you. Chris, I'm going to, when I go to this slide on credit, let's see, please repeat what you just said. Okay, so let me see. Quarterly finances, full year financials, cash flow, balance, etc. Skipping all that. Ford Blue, okay. Ford Model E. Full year EBIT loss of $5.1 billion. Industry pricing pressure, investment in battery plans and next gen products, and cost reductions. Okay. Wild. Ford Credit. Okay, so let's see about Ford Credit here. Financing margin improvement, higher volume and mix. On the negative side, higher operating lease depreciation, higher credit losses with US retail LTR ratio approaching historical levels. Expect auction values to decline modestly in 2025. I'm going to reply with this to the space. Actually, that's fine. Don't need to do that right now. But if anybody wants to see these graphs, they're on Ford's presentation, page 17. So auction values are expected to decline modestly in 2025. That's interesting. Okay. In Q3 2024, they were 31,200 plus. And in Q4, they dropped to under 30,000. So that's a big drop in one quarter. Okay. 29,910. Although there might be some seasonality obviously involved with that. So year over year, they're up from 29,175 to 29,910. Okay. But in Q1, they're supposed to improve. So expect auction values to decline modestly in 2025. So that's interesting commentary from Ford. These are 36-month off-lease auction values. Okay, interesting. Now, U.S. retail loss to receivables ratio has increased in the last couple of quarters to 0.57% in Q3 and 0.56% in Q4. Before that, it was 0.41%. But Ford says 2017 to 2019 average was 0.56%. So back to averages is what we're seeing. Chris, what did you have to say before about this?
Yeah, I was just saying that looking at Ford's website right now, it doesn't look like they're pandering to poor credit buyers. And they're specifically saying not everyone's going to qualify for a loan through us, whereas Carvana is the complete opposite. They say, we'll take anybody, we're not checking your credit. So Carvana, I think, is soaking up a lot of these poor credit car buyers.
Makes sense. Thank you, Chris. Stephen?
Hey, sorry, this is off topic, Iman, but I put in the chat. Do you know if Palantir has any type of deal with XAI?
Yeah, I saw that video today. I'm sure they do. I mean, Palantir is Peter Thiel, and obviously Tesla XAI are Elon, and they work together. So I'd be surprised if there wasn't a deal.
Yeah, but okay. Thanks. Yeah.
Yeah, about what?
I don't even know anymore, man. It's all confusing trying to keep track of everything.
Yeah.
Hey, Iman, have you mentioned what the selling of the Twitter for 97 cents on the dollar? Have you spoke about that yet? And if you haven't, could you explain it to people who aren't in finance?
I don't think it's very surprising. I think Elon has, very good relations with investors in the investor community and investment banks. So I'm not surprised that they were able to roll over some debt.
But did he lose money on it? Why are they saying 97 cents on the dollar? So like it's obvious. So is it showing it to be less valuable than what it was when he purchased it for 44 billion?
I'm not sure. I honestly don't know I would have to see the entire deal. I don't know. I
Okay,
don't think it's
sorry.
material. For 2025 guidance, they expect to lose another 5 to 5.5 billion in 2025 for Model E department. I thought they were doing away with their electric vehicles, but maybe not. That's crazy. And that doesn't make much sense. Adjusted free cash flow of 3.5 to 4.5 billion, lower than the 6.7 billion actual in 2024. So they expect their adjusted free cash flow to be almost half. Interesting. Due to lower industry pricing. Interesting. And they're assuming U.S. industry sales of 16 to 16.5 million units. They believe in the first half is going to be more challenged than the second half. because in the first half they expect lower wholesales, including launch downtime, moderated pricing, and exchange effect, foreign exchange effect. In the second half, they're going to see some cost efficiencies and stabilized volume. And they expect pricing to, yeah, that's interesting. Okay. I'm going to go back to GM and see if they said anything about second half being better than the first half. But that's a hell of an assumption, I think. All right. So that's on Ford. Stephen, why do you care about XAI finances? I mean, it's not publicly traded and doesn't really tie into Tesla much.
Yeah, I think I used to try and gauge the overall status of Elon's wealth. To be honest with you, depending on how the company's doing, like because I mean, a lot of his stock is held up in court. I mean, a lot of most of his wealth isn't liquid, right?
Yeah, most of his wealth is in Tesla and SpaceX, and yeah, I don't know. I don't know. He's the world's richest man. Like he's not gonna have any financing issues.
I mean, you're right. I guess I see it as I don't know. I don't understand how he's still able to keep Twitter up and running with the way I thought the finances are going. Obviously, I'm way off.
Well, they have positive free cash flow. It looks like, right? They increased their adjusted EBITDA. The revenues have plunged or whatever, so that means he cuts a lot of costs, which is what he does best. He cuts a lot of costs. Like he runs a lean business. But the one thing I want to look at, actually think of lean businesses. I think the Tesla's operating expenses increased quite a bit in the quarter. So let me just kind of take a closer look at that a little bit. In Q4, operating expenses increased from 2.28 to 2.6, and a year-over-year increase of 9%. Let's see what drove that. If I look a little deeper into the income statement, and then we can also pull up the 10Q after that. Actually, let me just look at on the slide on Model Y, the new Model Y. Available starting March. Starting price increases from 34,000 to 46,000. That's going to come down obviously quite a bit. Range from 311 to 320. I think people are hoping for more range, but they didn't get that. Seating. Second row gets power two-way folding and heated. So you get power two-way folding on the second row. That's new. And you get ventilation in the first row. So ventilation was also Model 3 Highland. Displays, you get a second screen in the back. Second generation suspension, second generation noise reduction hardware. Okay. 8 exterior cameras include new front-facing camera. Okay. And audio has 2 more speakers. Connectivity has second generation hardware. Trunk, hands-free power open. Okay. I mean, a lot of cars have those already. Aluminum detailing, premium textiles, and climates. Okay. I mean, yeah. I mean, I was thinking maybe the Model Y refresh would get more than the Model 3 refresh, but doesn't seem to be the case here. It's the same refresh. And I think the results are going to be the same. Like the Model 3 refresh didn't produce a lot of excitement because people just want hybrids right now. They're not ready. Most people aren't ready psychologically to switch to an electric vehicle. They have 50,000 GPU training cluster at Cortex. Okay. Adjusted EBITDA has been the same for the last 3 years. Quarterly adjusted EBITDA has been about the same for the last 3 years, which is about $1 billion a quarter, basically. Stephen?
Hey, Iman, so with Tesla showing numbers, registrations like down 50, 60%. What is this going to do to their margins in the upcoming quarter?
Yeah, I think Q1 is going to be negative
Really?
volume. Yeah, yeah,
That'll be a pretty big deal.
yeah. I don't know. I mean, we don't know how much of it, and the stock is already down quite a lot. If you think about it, it was at 490, and it came down to 370. So that's a drop of let me see, 25%. And the stock already dropped 25%. Like that's hundreds of billions of dollars in a loss of value, from the top. Um, the 490 was a spike for a day or two, maybe called top at 460 or so. So it's come down. I think it's going to head lower, but I don't know if it's going to because they put up some negative numbers in Q1. Who knows? I mean, if Chris pointed out in yesterday's subscribers on the space that, and I didn't know this until Chris pointed it out, the delinquencies in subprime credit is at record levels today. Delinquencies in subprime auto loans is at record levels today. Record Q1. Right, Chris? It was a record December, my bad. So obviously subprime credit is now really Tesla's game. Tesla lends to prime, but that's how these things start. They start from the bottom and they kind of creep up a little bit because but what I haven't seen is the triple B high yield option adjusted spreads widening at all. So they're at very low levels. So I mean, obviously subprime is lower than triple B, so maybe I should check triple C kind of spreads. But let me see if I can actually do that. Stephen, what's your question?
I didn't have one, sir.
Okay, you don't have to call him. So why do you call him sir?
Sorry, it's just force habit. No, I got nothing. No. Sorry.
Why is it a habit? Were you in the military or something?
Yeah, I was in the military for
Oh, you were?
8 years.
Thank you for your service.
Yeah, it was a long time ago. But yeah. Also,
Yeah.
it's just respectful. I try and be respectful to everyone.
Thank you, Chris.
Thank you, sir. Yeah, I think we're seeing a lot of depreciation in the auto market across the board, especially in EVs. So you have people not paying their loans and they're underwater, and I think it's just not a good situation here.
Yeah. Well, Chris, then how do you explain unit sales increasing across in the industry, in the U.S. industry?
Carvana giving out subprime loans.
But I'm talking about the new production.
I don't have an explanation.
Yeah. Okay, just a quick look on operating expenses for Tesla. Research and development increased from 1.04 to 1.28, and then SG&A increased from 1.19 to 1.31. So it's about the same increase on two line items. And that's despite the fact that last quarter had $55 million of restructuring cost. And the quarter before that, Q2, had $620 million of restructuring costs. So that explains the big bump in total operating expenses in Q2. SG&A has been about the same for the last 5 quarters, kind of gyrating around 1.3 billion. R&D is the one that jumped unusually this quarter. So that's an increase of about $236 million in the quarter. That can be a number of things, obviously. I'm not sure if the company explained what it is, but okay. High yield option adjusted spread. Let's see. There's a bit of a tick up, but it's still historically low. So it increased from 2.6 to 2.73 in the last couple weeks here. But that's extremely low compared to where it was in 2024. 2024 was around, mostly around 3.2%. It spiked as high as 3.9% August 2024 high yield index option adjusted spread. And then at the end of in mid 2022, when we had those banks failing, it surged as high as 6%. So today it's extremely low levels. This is the lowest it's been. Let's see. This is the lowest it's been since May of 2007. And I wouldn't expect a recession to start until after these spreads blow out or start rising at least.
Could you explain that a little bit more?
Yeah, sure. So, you have your risk-free yield, which is your treasury yield, and if you have a company that is going to borrow, that's issuing debt to borrow money, you know, you obviously have an interest rate that is going to be higher than the risk-free rate. So the U.S. government borrowing money versus your company borrowing money, U.S. government can print its own money. It's paid its debts historically. It has hundreds of years of history of doing so, and is the biggest economy in the world, etc. So um, U.S. Treasury has a solid credit history, basically. So they have the risk-free rate. Today, it's at 4.5%. Okay. Your company is going to borrow at something above that. So the difference between the two is called a spread. Okay. If your credit rating is, let's say, triple B, okay, so it's not triple A, like you're not as good as the Apples of the world, which has majority of its balance sheet in cash, has tremendous free cash flow generation power, has global operations, so it's not kind of um, you know it's not like beholden to one country's whims and tweets. Then your credit spread is going to be something very low, and at times it can actually be negative, depending on the nature of the debt you're issuing. If you have a company that's triple B, your spread according to today, let's say triple B option adjusted spread yield today is at 1%. Okay, that's also extremely low. So instead of 4.5, you're issuing debt on average about 5.5%. Triple B US corporate index. Okay. This is lower than even the 2000s. It's as low as 1998. Okay. And it's as low as June 2021, 1%. And then triple C, I think high yield is, let's see, option adjusted with a calculated spread between complete OAS as long as it's for high yield, master 2 OAS using index of bonds that are below investment grade, those rated BB, double B or below. So triple C is actually going to be more than this, but triple B is where you kind of cross into investment grade. So triple B is still investment grade bonds. So investment grade bonds are still extremely, the spreads are still super cheap. Okay. High yield is also cheap, but it's at 2.7 as opposed to 1.0 for triple B. Okay, so 2.7 plus 4.5, you're looking at something above 7.2, 7.3%. So if you want to lend to a company that has triple C, double B or below rating, okay, single B, triple C, double C, single C, D, etc. That means these companies, maybe they don't generate profits, or maybe they have some debt on their balance sheet already. And these are kind of ratings assigned by S&P and Moody's and Fitch, etc. And so you're taking more risk, kind of like Carvana is doing. But in return, you're getting a higher spread and higher rates. Does that make sense? Okay, so that's a thumbs up. And the option adjusted spread just means, some of these bonds are puttable, callable. They have various, components to them, and its option adjusted spread is kind of like strips the bond pricing out of those option pricing so that they are comparable to each other. That's all that means. So there's not much stress in the economy, is the conclusion here, looking at these things. There's no stress in the economy at this time, except for the one that Chris highlighted, which is what the kind of delinquencies in the subprime lending for auto loans. That's it. That's the only stress that is in the economy today. Even the banks are doing great. I mean, regional banks have been fine. The Fed has gotten in front of a contagion a couple of years ago, and big banks are doing great. They're set to be doing great more in 2025. But we'll see. We'll see. It very much feels like a 2006 today. 2006. There's some stress, some cracks, but it's not alarming levels at this point in the economy. But it can turn alarming very quickly. I think the economy is on the edge of kind of that situation. Chris?
Yeah, circling back to the comment about total new vehicle sales rising. I'm looking at some data from the St. Louis Fed and on new vehicle sales from the last 50 years. And we're just getting back to pre-COVID levels for new vehicle sales. And yeah, I agree on the 2006 comment.
Yeah. The GM asked in a reply, I missed some of the reading, but it didn't note that RAM pickup, which is an EREV. See, I didn't know that RAM has a pickup that's EREV. Yeah. Yeah, amazing. I think that Tesla bulls need to kind of take note of these, new information from Ford Blue Cruise, GM Super Cruise, BYD's EVs, profit margins being higher than Tesla. I think people are kind of investing their life savings without looking at these things with old information. Now, that doesn't mean, Tesla can't reclaim its market cap with a good, solid, humanoid, etc. But that also, I think, is years ahead too. So, I think at a minimum, these Ford Blue Cruise, GM Super Cruise, what they're going to do is they're going to kind of prevent Tesla from using FSD as a selling point for its vehicles, and that's a problem for the obviously bottom line. Let me see if Troy has any first reading on Q1 sales at this point. So Troy points out the same thing in a reply to Tesla Yoda 20 hours ago. He says no, but Tesla released Model 3 Highland, and the Model 3 sales didn't increase in the US or Europe. Yeah. Troy estimates 58,000 orders for Model 3, old Model Y, and new Model Y in China in January, based on a calculation comparing old reservation numbers, and actual deliveries in the past. He's assuming 36,000 Model 3, old Model Y were delivered in January. That leaves 22,000 orders for the new Model Y. Interesting. So he estimates 22,000 new Model Y orders in January. Tesla didn't repeat its 20 to 30% growth comment in the last earnings call. Tesla says we expect the vehicle business to return to growth in 2025. So Tesla is aiming for 1.79 million units, a few hundred units higher than the 2024 number, according to Troy. I don't think they're going to get that. I think it's going to be year-over-year drop, despite the new Model Y. Okay. Anything else on your mind, Stephen?
I got nothing.
Okay. So we reviewed Ford's financials. Ford is generating about the same free cash flow as Tesla, or adjusted EBITDA, let's say, and about $1 billion. But Ford's market cap is about less than $40 billion today. Ford market cap today is $37 billion, and Tesla's at 1.2 trillion. We talked about Blue Cruise commentary, tens of millions of over-the-air updates, hundreds of thousands of users, 40% growth in paid subscriptions. I think Blue Cruise and Super Cruise are going to cap Tesla FSD growth. And on the other hand, Waymo announced on the Google call, we listened on subscribers on this space yesterday. Waymo has given 4 million autonomous rides rising 150,000 rides per week. And they're starting now in Austin in partnership with Uber. They plan to expand into Atlanta and Miami. They're also working on their 6th generation autonomous vehicles, significantly reducing hardware cost. And $5 billion they just raised. They're vertically integrating into world-class AI research, building their own TPUs that rival NVIDIA. And they now have $500 billion in assets, Alphabet does. So I think Waymo is going to get to tens of thousands of autonomous vehicles by the end of next year. And they're going to be given tens of millions of rides. I'm going to pin that tweet up here too. I would appreciate likes and reposts. Something that posts that don't fit the narrative don't get reposted so much. So I think this is why people are kind of just so out of touch with recent facts, and they operate on old facts.
I didn't know about the LiDAR going down in price.
I know. Yeah, LiDAR on $25,000 BYD cars is not a well-known fact, but that's a fact. And tomorrow BYD is going to have a press conference, they said, about their autonomous vehicle technology, and their stock is up 10% today to all-time highs. And that's also not known either. It's really sad what's happened in the Tesla community. Really sad. I'm going to read an article on NVIDIA, and then we're going to call it a day. So if you're not interested in NVIDIA, you may close the topic or close the space. Let's see. DeepSeek, a Chinese AI company. This is from semianalysis.com, which was lauded as the best semi-analyst per David Sachs. Okay. DeepSeek, a Chinese AI company, has gained significant attention for its impressive performance and cost effectiveness, particularly with its V3 model. However, the hype surrounding DeepSeek's training cost is overblown, as it only accounts for a fraction of the total expenses, including hardware, R&D, and operational costs. While DeepSeek's achievements are noteworthy, the rapid pace of AI progress means that similar capabilities can be achieved with less compute over time. So this is an article by semianalysis.com, which is a blog that I'm going to start following a bit more closely because this guy was on the last Lex Friedman podcast. He is an NVIDIA bull, an Elon fan. So he is the perfect bull analyst to my bearish thesis on NVIDIA. So he obviously knows the space very well, knows a lot of the technical issues that are involved, and he's an NVIDIA bull. So I need to pay close attention to the other side of my positions. DeepSeek took the world by storm. For the last week, DeepSeek has been the only topic that anyone in the world wants to talk about. As it currently stands, DeepSeek daily traffic is much higher than Claude, Perplexity, and even Gemini. But to close watchers of the space, this is not exactly new news. We have been talking about DeepSeek for months. The company is not new, but the obsessive hype is. Semi-analysis has long maintained that DeepSeek is extremely talented, and the broader public in the United States has not cared. When the world finally paid attention, it did so in an obsessive hype that doesn't reflect reality. We want to highlight that the narrative has flipped from last month, when scaling laws were broken. We dispelled this myth. Now algorithmic improvement is too fast, and this is somehow bad for NVIDIA and GPUs. The narrative now is that DeepSeek is so efficient that we don't need more compute, and everything has now massive overcapacity because of the model changes. While Jevons paradox too is overhyped, Jevons is closer to reality. The models have already induced demand with tangible effects to hardware H100 and H200 pricing. High Flyer is a Chinese hedge fund and early adopters for using AI in their trading algorithms. They realized early the potential of AI in areas outside of finance, as well as the critical insight of scaling. They have been continuously increasing their supply of GPUs as a result. After experimentation with models with clusters of thousands of GPUs, Highflyer made an investment in 10,000 A100 GPUs in 2021 before any export restrictions. That paid off. As Highflyer improved, they realized that it was time to spin off DeepSeek in May 2023 with the goal of pursuing further AI capabilities with more focus. Highflyer self-funded the company as outside investors had little interest in AI at the time, with the lack of a business model being the main concern. Highflyer and DeepSeek today often share resources, both human and computational. DeepSeek now has grown into a serious, concerted effort and are by no means a side project as many of the media claim. We are confident that their GPU investments account for more than $500 million of US dollars, even after considering export controls. The GPU situation. We believe they have access to around 50,000 Hopper GPUs, which is not the same as 50,000 H100s as some have claimed. There are different variations of H100 that NVIDIA made in compliance with different regulations, H200 and H20, excuse me. Okay. With only H20 being currently available to Chinese model providers today. Note that H800s have the same computational power as H100s, but lower network bandwidth. Interesting. We believe DeepSeek has access to around 10,000 of these H800s and about 10,000 H100s. Okay. Furthermore, they have orders of many more H20s, with NVIDIA having produced over 1 million of the Chinese specific GPU in the last 9 months. These GPUs are shared between Highflyer and DeepSeek and geographically distributed to an extent. They're used for trading, inference, training, and research. For more specific details, please refer to our accelerated model. Okay. Well, I mean, all of this so far is supportive of a short position in NVIDIA. And the reason is because there are no H200s here, right? There's some H100s, but most of what they have, A100s, H20s, and H800s, are worse with lower network bandwidth. So the whole thesis of the short NVIDIA is you don't need the cutting edge chips, GPUs, to produce what OpenAI did. So let me see. There's a new. Never mind. Okay. All right. Let's continue here. Let's see if there's anything here that opposes my short position. I mean, this guy was just super. I listened to some of the segments of Lex Friedman podcast, and he's super bullish on NVIDIA. Just kind of fanatic about it. So let's see. Our analysis shows that the total server capex for DeepSeek is $1.6 billion, with a considerable cost of $944 million associated with operating such clusters. Similarly, AI labs and hyperscalers have many more GPUs for various tasks, including research and training, than they commit to an individual training run due to centralization of resources being a challenge. xAI is unique as an AI lab with all their GPUs in one location. Okay. DeepSeek has source talent exclusively from China, with no regard to previous credentials, placing a heavy focus on capability and curiosity. DeepSeek regularly runs recruitment events at top universities like PKU and Zhejiang, where many of the staff graduated from. Roles are not necessarily predefined as hires are given flexibility, with jobs ads even boasting of access to 10,000 GPUs with no usage limitations. They're extremely competitive and allegedly offer salaries of over $1.3 million USD for promising candidates, well over the competing big Chinese tech companies and AI labs like Moonshot. They have 150 employees but are growing rapidly. As history shows, a small, well-funded and focused startup can often push the boundaries of what's possible. DeepSeek lacks the bureaucracy of places like Google, and since they are self-funded, can move quickly on ideas. However, like Google, DeepSeek, for the most part, runs their own data centers without relying on external party provider. This opens up further ground for experimentation, allowing them to make innovations across the stack. We believe they are single best open weights lab today, beating out Meta's Llama effort, Mistral, and others. DeepSeek's price and efficiencies caused a frenzy this week, with the main headline being $6 million figure training cost of DeepSeek V3. This is wrong. This is akin to point to a specific part of a bill of materials for a product and attributing to the entire cost. The pre-training cost is a very narrow portion of the total cost. Training cost. We believe the pre-training numbers know where the actual amount spent on the model. We're confident that their hardware is well higher than $500 million over the company history. But that's not the point. Like they still have not addressed the actual short position thesis. Okay. Maybe there's more. Let's see if there's more. One second. Here we go. Develop new architecture innovations. During the model development, there's a considerable span on testing new ideas, new architecture ideas, and ablations. Multi-head latent attention, a key innovation of DeepSeek, took several months to develop and cost a whole team of man-hours and GPU hours. The $6 million cost in the paper is attributed to just the GPU cost of the pre-training run, which is only a portion of the total cost of the model. Excluded are important pieces of the puzzle like R&D and TC or the hardware itself. For reference, Claude 3.5 Sonnet costs tens of millions to train, and if that was the total cost Anthropic needed, then they would not raise billions of dollars Google, tens of billions for Amazon. Still haven't addressed the data thesis. Closing gap, V3 is no doubt an impressive model. I'm just going to read the first sentence. This is a very long article. That is true for GPT-4, blah, blah, blah. AI moves quickly. An example is small models that can be run on laptops that comparable performance to GPT-3. Okay. So far, what we witnessed with this pattern is that AI labs spend more in absolute dollars to get even more intelligence for their buck. Estimates put algorithm progress at 4 times per year, meaning that for every year passing, 4 times less compute is needed to achieve same capability. Dario, CEO Anthropic, argues that algorithm investors are even faster and can yield a 10x improvement. Okay. When investigating the cost of GPT-4, we see similar decrease in cost. Okay. To be clear, DeepSeek is unique in that they achieve this level of cost and capabilities first. Okay. Is R1's performance up to par with O1? I think everyone agrees that it is. I'm going to skip that part. Google's reasoning model is as good as R1. Okay. Technical achievements. DeepSeek has cracked the code and unlocked innovation that leading labs have not yet been able to achieve. We expect that any published DeepSeek improvement will be copied or Western labs. Okay. What are these improvements? Most of the architectural achievements specifically relate to V3, which is the base model for R1. Okay. Training, pre and post, mixture of experts model, multi-token prediction, FP8 accuracy in training. Okay. Despite concerns that mixture of experts efficiency gains might reduce investment, Dario points out that the economic benefits of more capable AI models are so substantial that any cost savings are quickly reinvested into building even more larger models. Okay. In terms of R1, it benefited immensely from having a robust base model V3. Okay. Multi-head latent attention. Yeah. Let's see. As discussed in our Scaling Laws article, KV cache grows as the context of a conversation grows and creates considerable memory constraints. Drastically decreasing the amount of KV cache required per query decreases the amount of hardware needed per query, which decreases the cost. However, we think DeepSeek is providing inference at cost to gain market share. Oh my gosh. These are just bullish, biased assumptions and nothing else. I don't really see much substance here. So, let's see. DeepSeek has also enjoyed more efficiency for inference workloads with H20 due to higher memory bandwidth and capacity compared to H100. They have also announced partnership with Huawei, but very little has been done with Ascend Compute so far. Okay. They have also announced partnerships with Huawei. I'm going to look into that a little bit. Let's see. DeepSeek, Huawei. I'm going to get to that later. We believe the most interesting implication is specifically on margins and what that means for entire ecosystem. Below, we have a view of the future price and structure of the entire AI industry, etc. Yeah. So this long article that is super bullish of NVIDIA does not answer the bear thesis that you don't necessarily need the highest priced, the cutting edge, 80%, 90% margin GPUs to create something that challenges the models that do use those cutting edge GPUs. And I'm going to continue to dig through this blog, semianalysis.com, that was highlighted by David Sachs as the best in the world. So is the best semiconductor analyst in the world, Dylan Patel, he said. But so far, I'm not impressed. I think the person that was on Lex Friedman podcast with Dylan was more impressive. But I haven't had a chance to kind of watch the whole thing just yet. So I'm going to report back as I learn more. And, I'm looking for just as much information as possible that contradicts my bear thesis on NVIDIA. And, this was how is best, so I figured I would just read it. So that's it. That's it for now. Thank you very much, everybody. Appreciate you being here. And I will chat with you all next time. Take care.